Today's guest is Tom West from Signature Estate and Investment Advisors in Virginia. Tom leads a team of financial professionals who aim to secure and protect wealth for families facing uncertainty due to disability, illness, or death. And I think you really will enjoy his presentation today. So Tom, I'll go ahead and turn it over to you here. There you go.
All right, I think I'm ready to go. Hello, everybody. I've got about a half an hour of prepared comments, and as Eric talked about, we'll have the opportunity also to field some questions at the tail end of my presentation. What I'm going to try to do is be mindful of keeping the 30 minutes going, and I'll see if I can field all questions at the end, and Eric will appropriately be able to help me out with that. I wanted to start with this particular graph here, where when we're talking about the financial challenges facing a terminal illness, when we're looking forward to the possibility of someone that you love not being part of the picture any longer, and you're thinking about ways to plan ahead for all of the uncertainties, either through that illness and death and what might lie beyond, it's appropriate as an advisor to recognize that decisions that families make are oftentimes compromised in this chapter through feelings of anxiety, but even more specifically, feelings of grief. Anticipatory grief is an area that I have spent a lot of time professionally trying to understand what is the impact of anticipating grief in for a future event on families' abilities to make effective decisions in times of crisis. And I think this is going to be an important theme in the prepared comments for today. Grief, in my mind, as a challenge to decision making, we need to initially identify the two different kinds of grieving styles, and the psychology behind them impacts the way that people can vet the variety of different financial actions that they need to take. Sometimes when people are grieving forward, they're using an intuitive style, where these individuals are experiencing grief as a deep feeling that must be talked and expressed. A lot of times clients in this situation are grieving this way are looking to ascribe some meaning both to the lives that they've had up until that point and the likelihood of them facing a terminal illness and death in the foreseeable future. This is a very discrete pattern of grieving than what's considered an instrumental style of grieving, where individuals are experiencing grief in physical or cognitive or behavioral ways, and these individuals a lot of time want to face facts, make sure that they're taking some proactive action, make a series of lists, check off a lot of boxes. Both of these styles of grieving are normal, but the way that they approach sometimes the minutia and the granularity of financial decisions are very different. So to this audience, I want to identify both of these are very normal, but knowing which style of a griever different family members might be can be impactful in being self-aware of what kind of challenges might be ahead to making necessary financial decisions. There is some conventional wisdom out there about what families should do in the face of a significant trauma like a death of a loved one. And the conventional wisdom usually is, grieving people should put off big decisions. And there's a lot of discussion about things like the fog of grief. The people have a lesser ability to withstand pressure from others, an inability to think through decisions that might have been easier in different chapters of their lives, sometimes a lack of concentration. In reflecting back on the series of clients that we've helped through transitions like this, it's been commented to me that there's nothing like a crisis to bring people out of the woodwork to tell you what you should do. Part of this presentation is to give you an idea of what the process should be to decide what sets of decisions really need to be made and what kinds of decisions should be appropriately put off until people get to more of a stage of normalcy after somebody passes away. Conventional wisdom, in my mind, is sometimes right. I think, generally speaking, countless grieving people make decisions that they regret later, and it was too soon. And I would just offer, for purposes of this presentation, you won't regret waiting more often than not to make big decisions, but you might very well regret acting too soon. in terms of making life-changing decisions, particularly those that might involve moving or transitioning from jobs or any decisions involved with children. Those are some of the ones that I would always give, and most grief counselors and social workers would give the consistent advice of settle into the new normal before making unnecessary life-impactful changes. The next piece that I have here, this had a little bit to do with some research that I did about what kind of advice do widows or widowers give to recent widows or widowers. And I thought that this first one was really useful. I spend a lot of time on the psychology of grieving and how families are dealing with the prospect of a terminal illness first, because I think that it very much changes the way that you want to work through some of the particulars, which is going to make up the bulk of this presentation. But this first one, identify a qualified guide. For many families, that inheritance of hope is currently in hopes to touch in the future. A lot of times you're looking at younger families where the peer group of the parents might not have ever experienced the death of somebody quite so young. And it was a client of mine shared with me one time that their ability to find somebody that's a qualified guide through the process, find somebody that perhaps had had a similar experience of losing a loved one too early, it was something that was particularly important, because they felt that this was a peer that would be able to understand with a much higher degree of accurate empathy what they might be going through. The second piece of advice that widows would often give recent widows is listing all of your responsibilities and act on them only as required. I think that's important, and that's going to be a theme of my comments for today. Number three is something that we're always telling our clients that are in a time of crisis, making sure that you're patient with yourself and being patient with other people as well. A lot of times people can be well-meaning in terms of lending support, and the support sometimes can be counterproductive, particularly if it's prescribing a set of actions that might be premature. And this last one, do make conservative decisions, but, do make them. There is an impulse to procrastinate when families are facing a terminal illness. And again, part of my hope for the comments that we've got today is to help sort what are the things that have to be done and what are the things can most responsibly wait perhaps for more of a normal period of time. I'd like to put some attention into important documents that everybody really needs to pay attention to. And the way that I organized these is in three categories. And my first category is, well, what are the living needs for the family? Before anybody dies, what are the documents in which individuals can express wishes and desires so that their choices through the rest of their lives may be honored, even when they might be temporarily or permanently unable to make decisions for themselves? Many of these the audience already knows, but just to run through them: a living will and or 5 wishes. This is giving instructions on how people want to be treated. Somewhat similar is the physician's orders for life-sustaining treatment. These are doctor's orders that would give instruction about how to treat somebody when they might be terminally ill. Durable power of attorney for health care. Who's going to be making decisions about your health care, both the setting and the prescribed course of medical action. Durable power of attorney for property or finance. In the event that I might not be able to make decisions for myself, who am I assigning the responsibility of making decisions for property on my behalf? Do not resuscitate orders, also known as DNRs. Somewhat forgotten in the DNR conversation are do not intubate orders. I always like to put them together. These are instructions that in the event that somebody is failing in the last chapters of their life, what instruction you want to be giving to about life-sustaining treatment. And the last one is organ donor registry. Even when we're talking about facing a terminal illness, I think that the first service that we like to provide is paying attention to the needs of everybody prior to a death. But we also want to pay attention to after-death needs. What kind of documents should we be looking at that enable individuals to give assets to people they choose and to provide financial protection to persons or entities? I put two pieces up here in number 7, the last will and testament. I did mention a lot of times for different families and different financial situations, these can be coordinated with trusts. Effectively, a last will and testament, as well as a trust, as many of you know, is a set of instructions on how to distribute property after death. I also wanted to talk about the after-death need of understanding exactly how life insurance works. I'll spend a little bit more time on that in future slides about how to think about life insurance and how to process what to do before and after, depending on what the family situation needs with the death benefit that might be available. The after-death need as it relates to documents to facilitate passing on wisdom and life lessons. Some of my clients' families reflect back on periods of time when a loved one still had the ability to write down and reflect on important lessons that they've learned on their lives. The idea of a legacy will or an ethical will, things like, this is our family, this is my life, reflecting back on those different periods, making proactive efforts to conserve and remember those particular chapters is something that I know Inheritance of Hope has really a fantastic sensitivity to. Both with the Founders video, which is a fantastic example that's available to everybody on the website, also to the legacy videos that Inheritance of Hope coordinates with their regular retreats. If you haven't had an opportunity to read up a little bit on the legacy video that's included in a lot of the retreat experience for families, do check out the website or ask questions of Eric at the tail end of this presentation. But for what it's worth, those are some of the most valuable documents that families lead to loved ones, and I have consistent feedback years, sometimes decades after the fact of the impact that those types of documents make on families that find themselves left behind prematurely. Let's talk a little bit about additional important details beyond the documents that you want to consider about financial decisions. First one is listing all of the pertinent information that survivors will need in the event of a death or a disability. Now, the reason that I spend some time on these pertinent information points is when it comes time to make decisions during or after a terminal illness, the decisions oftentimes are only as good as the information that is at hand. If people don't have visibility on all of the different data points upon which to make decisions, invariably their decisions can suffer. So just in terms of giving families the ability to make effective decisions, let's list through these pretty quickly. Passwords to all online accounts, Social Security numbers, Veterans Administration information if it's appropriate, name and contact information for employers, bank accounts, credit cards, safety deposit box information, name and contact information of insurance agents, a net worth statement. I'll talk about that in more detail on the next slide. Name and contact information of all debtors and all loans. Attorney information, copies of birth and baptismal certificates and so on, identifying information like that. Information and deed of cemetery plot if applicable. Income tax returns, having those on hand. And name and contact information of regular doctors, dentists, and medical facilities. I find a lot of times that families can be gummed up in effective financial decisions when they don't have access to all of this information on hand. And it's troublesome sometimes as a professional to have to send families back to get the appropriate information about what, for example, somebody's financial situation is through these kinds of transitions. And to that, I give you this perspective. Financial statements I want to talk about for two different time frames, both before death and after death. And I always like to give the advice of listing income and income and expenses, those cash flow items before somebody dies, and then consider after somebody dies, what kind of adjustments need to be made. Sometimes expenses need to be adjusted. There's certainly one less person in that scenario to be spending money on, but also should there be adjustments for any earnings lost, whether it's wages or pension or whatnot. On the balance sheet is one aspect of a net worth statement, a list of all assets and liabilities. Where's the money, where's the debt, and identifying it as such. After death, making an idea with that balance sheet, what kind of adjustments need to be made if there's introduction of life insurance benefits, for example. And the last piece on the right, liquidity. Before death, I always give families the strong advice to make conservative assessments of what their cash needs might be if there's a requirement to pay for medical costs or unusual travel or whatnot. After death, making an assessment of any cash needs for any final expenses, funeral expenses, etc., any transition periods, or sometimes for more affluent clients, are there any taxes due at somebody's death? I always like to have an identified amount of needed cash on hand for both of these periods, both before death and after death. So with that, let's talk a little bit about timing. What are important dates that families facing terminal illnesses really need to be aware of, maybe even to put on the calendar to make sure action is taken? Making a list of time-sensitive things that have to happen and when they need to happen. The most obvious ones are taxes. Mandatory bill payments that don't stop just because a family's in the middle of transition, so if it's mortgage, car payments, rent, etc. Knowing exactly that when they're due and putting the appropriate attention to them, that's something that I will tell clients in a grieving state to actually put on a calendar to make sure that it's not missed. Also, for families that lose somebody over age 70 and a half, if there's IRAs or retirement plans, the idea of required minimum distributions, the mandatory amount that people have to take out of these retirement plans, you always want to make sure that those are accounted for just because of the penalties associated with the failure to act on those required minimum distributions. So let me pay a little bit of attention now to legacy plans. I do want to spend a little bit of time on beneficiary information. In beneficiary information, while we normally ascribe beneficiary relationships to things like life insurance, beneficiary information is also required of a lot of annuity contracts or a lot of retirement accounts like IRAs or 401ks or 403bs and whatnot. This is some very strong advice, and I hope you pay attention to this one. Get confirmation from the financial institutions about current beneficiaries as soon as possible. And the one thing that I put in bold on this particular graph, do not assume that the selection of beneficiaries was done correctly the first time. One of the most consistent mistakes that I see families, young families and older families make is having no beneficiary designated means that assets are going to have to go through probate and go through the will. Sometimes that can be problematic. It can be problematic because it takes a whole lot of time to pass assets through the probate or through the will. And secondly, there might be additional probate fees associated with leaving money to somebody else through a legal document like a will as compared to just having a beneficiary designation where assets could transfer immediately. This is also a piece, my last bullet, for families that are facing a terminal illness where there are children in the picture. Be aware about the problems of naming underage beneficiaries on these types of life insurance or retirement accounts. If somebody inherits money that is underage, remember, if you're a minor, you're not able to inherit money directly. And guardianship provisions usually need to be made to custody money on behalf of minors. Occasionally, if this isn't thought out beforehand, if there's not a trust vehicle that's set up on behalf of these minors beforehand, there might have to be court proceedings if a surviving child inside of age 18 inherits some money directly. Sometimes courts have to be involved to have a custodian named to be able to steward money until that child reaches age of majority. So be aware that underage beneficiaries add an added level of complexity, and it's generally assumed that underage beneficiaries for all families is usually considered a mistake. So don't assume that it was done correctly. Get confirmation from all of the institutions where you have beneficiary designations to affirm that they're done and assets are going to be distributed the way that you want. I also wanted to give some advice about life insurance a little bit more broadly. Life insurance is normally and appropriately associated with the needs of the living after somebody passes away. But there are circumstances where life insurance can help out, even in a terminal situation prior to death. My first bullet here, find out if life insurance death benefits can be accessed from the policy before death through something called an accelerated death benefit provision. What this basically means is many policies have an accelerated death benefit rider associated with them where the insured is able to collect a percentage, usually of the majority of the death benefit in the event that they're terminally diagnosed. They usually have 3 to 6 months left to live. And each individual company does it a little bit differently. Typically what ends up happening is the insured makes a phone call query to the insurance company and basically asks what the particular provision is. The company is going to then do a calculation of how much death benefit could hypothetically be made available to a terminal individual, and then you can work through the company to see if there are distributions appropriate then. For families that are sometimes cash-strapped with high medical expenses at a different chapter of a terminal illness narrative, this provision is something that you don't want to overlook. Another piece that I wanted to talk about with life insurance, we're coming up, as I'm giving this presentation, we're at the early part of October. The open enrollment for a lot of workplace benefits is coming up, and given that open enrollment for most employers is right around the corner, I would give this audience the advice to see if an employed individual or somebody that's just separated from service but is still maintains some employee relationship, maybe they're on sick leave and whatnot, can you apply for more group life insurance? Remember that group life insurance through employers is not underwritten, so a terminal diagnosis will not prevent somebody, if they're eligible as an employee, from acquiring more group life insurance. That is, for some clients that we've advised in the past, that is a reason sometimes to negotiate staying on payroll for a period of time, even if somebody's not going back to work because of the medical condition that they're in. But that's an important thing to consider. I want to talk a little bit about taxes. Prior to somebody passing away, it's appropriate to call attention to monitor what kind of health expenses might be deductible. And this is sometimes hard to do with all of the appropriate areas of attention that family needs to put towards the needs of a dying individual. That being said, if more than 10% of a household's adjustable gross income is our medical expenses, that overage a lot of times is deductible on your taxes. Sometimes it makes sense to change around where you're pulling money from depending on the size of these deductions. If families are spending a significant amount of money out of pocket for health or hospice-related expenses that might not be covered otherwise, those tax deductions can be very critical in terms of saving the client tax money. I wanted to put a bullet on the bottom here. Note that terminal individuals a lot of times can tap retirement accounts like IRAs or 401ks, depending on the plan, without incurring penalties that you normally associate with pulling money out of retirement plans before age 59. So sometimes people predictably think that IRA or 401k money should be on a shelf until we retire, but these are typically more liquid than people think about if there's a terminal diagnosis. Another note on taxes, using capital losses in a portfolio, if you have investments that have lost money from what you paid for them, you might want to consider selling them and realizing the capital losses for your taxes prior to somebody dying. I've always found that people sometimes underestimate the tax impacts of capital losses, and be aware that capital losses cannot be carried forward after death. Another thing from a tax planning standpoint before death, consider repositioning appreciated assets to take advantage of a capital gain step up. So let me give you an example by way of a story that I have written here. If a couple buys a house for $250,000 and they put it in, and they bought that house in a joint name, and that house appreciated to $400,000, one thing that the family could do is they could consider putting the house entirely in the name of the terminal spouse. At death, that cost basis steps up from $250,000 to $400,000, and that house could hypothetically be sold, and nobody has to pay any capital gains on that $150,000 worth of appreciation. That type of death blood planning is very normal, particularly for older clients with larger estates that are trying to minimize taxes. But even if we're speaking with families that might be younger, this is a technique that you'll want to be aware of titling assets in the name of the terminal spouse in order to get a basis step up to avoid capital gains. And I think I'm running pretty close to on time. We field in my office a lot of questions, and I'm sure Inheritance of Hope as well, about catastrophic medical expenses that are associated with certain diagnoses related with terminal illness. I did want to put as a resource here on my slides, and also all of our slides are going to be available. Eric will give details on the website. But the Patient Advocate Foundation, which I put the website up here, this is where I refer clients that are really seeking some advocacy about arbitration, mediation, and negotiation associated with settling issues regarding access to care or medical debt or job retention that might be related to illness. You know, as a financial advisor, you know, a lot of times I'm trying to focus on cash flow and liquidity and investments and whatnot, but the implications of broader issues that the family is facing, many of them on this slide here, can be very impactful in terms of how decisions are made. I always like to keep this resource on hand. This resource and a number of others I've made sure to put in Eric Miller in the Inheritance of Hope group's hands, and I'm sure he's going to be referring to it later. That runs me at about 29 minutes. I wanted to stop here and hand the presentation back to Eric and give Eric and the audience an opportunity to ask questions as appropriate.
Thank you, Tom, and certainly we have a number of questions here. And we're going to start with the qualifications, a qualified guide. The first question is, how would I go about finding a qualified guide in my area? And a follow-up to that would be, what qualifies certification, i.e. certifications or other professional associations would help us know someone or recognize someone as a qualified guide?
Okay, so the qualified guide on that particular page, this is, you know, this is under sort of a thread of discussion on how do families find people that really can understand what they're going through. The qualified guide, in my mind, is people that have either had life experience or particular training in terms of servicing and offering support for families that are facing terminal illness. There are many faith traditions where you see priests, ministers, rabbis, etc., that have quite extensive experience in counseling families in challenging situations like this. That's one possibility of thinking about a qualified guide depending on your faith tradition. More specifically, what I was thinking of is, you know, are there survivors of similar situations? And I would probably work backwards from the medical diagnosis that individuals might be facing, whether it's different kinds of cancers or any of a number of them. A lot of times, different diseases have related support groups that are associated with them of either survivors of the disease itself or families that are surviving somebody that had passed away. I would look for health-related groups and affinity and advocacy groups as one line of thinking in terms of finding a qualified guide. Depending on where you live, certainly in my area, which is the broader Washington, D.C. area, there's lots of support groups that are associated with individual diseases at varying ages, where qualified guides, in my broad use of the term, should be pretty apparent. I hope that's a thorough enough answer. I would expect that Inheritance of Hope can think a little bit about the way they approach their retreats, because that is sort of a qualified guide as a function as compared to an individual. That's an organization that I would look to help round out the answer as well.
Thank you, and I'd further that as well. We have a community of support that we've built and continue to develop, and it's there to be leveraged by the families that we serve and their loved ones surrounding that. So I'd recommend Inheritance of Hope as well, obviously, as a qualified guide. Specific to financial planning and what you do, Tom, the question is, how would I go about finding someone in my area that essentially does what you do in your area?
That's a difficult question, because you know, as pretty much everybody in the audience probably knows, you know, the financial service industry is sometimes a little opaque for normal consumers to be able to make heads or tails of who does what and how are people paid and whatnot. The best thing that I can offer is going back to referral sources. And referral sources, I'm glad that you paired these questions together, Eric, because, you know, I think that if you have, you know, disease-related or faith communities that are serving this role of qualified guides that can give families counsel and support through different chapters of facing a terminal illness, both before and after death, a lot of times those are the groups that have sensitivity to local professionals that have been impactful and really helpful in that particular chapter. If you're taking a look at individual qualifications, that gets a little bit more challenging, and there's probably not a lot of utility of being able to answer the question like a CFP versus, you know, a CPA versus, you know, a life insurance agent and whatnot. Each of those different professional designations doesn't necessarily tell you that somebody's qualified and appropriate to operate in this space. I would think that finding those appropriate professionals through those qualified guides who helped you when you were going through the same sorts of things, or with faith communities, who are the professionals that seem to be drawn to giving assistance to families that are in this situation, those would be the places that I would look. One last option is finding attorneys that are doing a lot of trust and will and power of attorney work. A lot of times they have a short list of financial professionals that they have some comfort going to for families that are either preparing for a death or settling an estate. The attorneys that would help put together the legal documents, I mean, they have an incentive to make sure that the plans that they develop with the client are implemented as intended. So there are likely other sources where you might be able to find qualified financial professionals to assist in all aspects of this story.
That leads me to my next question then here. So in your opinion, do I need to go through a lawyer for my living need documents?
Generally speaking, I think best practice is yes. In the absence of going to an attorney, like what's the best thing, for example, that you can get off the shelf? There is a document, you can find it online, called 5 Wishes. That is a model for a lot of different states that basically gives a whole lot of instructions about end-of-life preferences and how people want to be treated physically. At the same time, I think that best practice would be to use an attorney to help put together some of these things, mostly because these are professionals that are a lot of times are trained to ask the right questions. And they also have experience to know what the implications of different answers might be. You know, without being trite, this is likely the first time that families are facing a terminal illness too young. That's pretty unlikely to happen a lot to the same family. So knowing that there are objective third parties that are in the position to give expert advice about, well, if we select this particular course of action or these nominees, for serving as a power of attorney, you realize that that means A, B, and C. And I'll give you a really good example. A lot of times parents with adult children will feel that they don't want to pick one kid over another to have healthcare power or financial power of attorney for their incapacitated last days before death, mostly because they don't want to look like it's playing favorites in one way, shape, or form. A lot of times it is not appropriate to pick 2 or 3 or multiple children at the same time in terms of making effective decisions in the moment. Being able to at least prompt questions about, is the person that might be taking responsibility, are they qualified? Are they informed? Do you have confidence that they're going to do what you ask them to do? Do you have confidence that they're going to work with the existing set of professionals that you might have, or is there a likelihood that they're going to be bringing in some of their own people that they're more comfortable with? Do they have the right information in order to serve in this capacity? One thing that in my personal experience, my wife and I took care of both of my in-laws through an extended illness. One of the things that I learned personally, and I see this a lot professionally as you pursue the answer to this question, Eric, is in a period of long-term care or terminal illness, or right after somebody dies and the survivors are trying to find a new normal, the family relationships invariably trump any other responsibilities that they might have. It might be very difficult for a very emotionally involved spouse of a terminal individual to be able to be an objective, arm's length analyst of the best things to do with money. And being aware of the limitations and the challenges for family members to make decisions that might have some big financial implications, just being aware of those challenges, I think having a professional guide walk you through those sorts of things, again, comes back to best practice.
Wonderful. And we'll continue on with the pertinent information, as it was a big, a lot of questions surrounding the information, the sensitive information. So I have a comment here. It says, I can see the value of having pertinent information for loved ones. Thank you for your list. Because it is sensitive and confidential, how many people do you recommend having the information you listed?
Oh boy, that's great. I mean, that's going to be a big "it depends" question. I mean, you have the additional complication of information and identity security in today's day and age. You know, one of the most predictable areas of financial fraud is, as you probably know, is hijacking the identity of somebody that's recently passed away. So I would always err on the side of the least number of people that is needed. One thing that I can, you know, in thinking about the answer to that question, Eric, some families will leave what amounts to be a treasure map, meaning I'm only giving this one person access to this sensitive information, but the contingent, sort of the plan C as compared to this person serving as my plan B, the plan C, there's always a backup that has a treasure map to go get the information, but I'm not necessarily sharing all of my passwords and all of my things with everybody. As I'm thinking about the information and identity thread for a second, you know, be aware that all of this digital property about who owns your email account after you die, what happens with your Facebook or LinkedIn or any of those types of accounts after somebody dies, be aware that that varies by company. And you certainly want to have all of the password information for any of that digital property intentionally left to the right people. And I'll give you one last caveat. For those terminal individuals who might be listening that have email accounts, and some of the email discussions that are on there you might want to keep discreet after you pass away, you want to be mindful of that when you're considering passwords and who gets what. But that would be the best answer would be the least number of people possible while allowing for future people on a contingency basis to go find access to the information as needed.
And a follow-up to that question. So the question is, how do you recommend providing that information? And I guess you kind of referenced it with the treasure map concept. Is that what you recommend?
I think so. And you know, the treasure map could be a number of different things. Like one thing that it's you know, best planning ironies where you have the list of absolutely everything that somebody needs to know that's in the safety deposit box and nobody knows where the key is. Like those things happen with more regularity than you would expect. I certainly think in every family situation or personal situation is a little different, but there should be at least one or two people that know exactly where absolutely everything is, and this is a conversation as well as, you know, given written resources and whatnot. There are some technologies out there, and this isn't a technology seminar, but there are some technologies out there about maintaining passwords online in some encrypted and secured location that if individuals have the time and inclination to explore, that might be a possibility as well. But the only other best practice in terms of this treasure map, how you go find all of this information, I think making sure that you've got somebody, maybe it's a professional, is your last gap. Maybe you have an attorney that has the treasure map on file, just in case the family's not able to manage access to this information. That might be another opportunity just for a last defense on access to important information.
Okay, great. Now I have a handful of just very specific questions that we'll shoot here real quick. Is there a scenario where someone with a terminal illness can get life insurance if they don't already have a policy?
Only that group, only that group scenario where employers offer group life insurance to employees and that terminal individual still has an employee status of some way, shape, or form. That's the most predictable place where people can get life insurance if they're uninsurable.
Okay. Does a capital loss carry forward after the death if the account is set up as joint tenants with right of survivorship?
The answer is yes. The carry forward losses do carry forward with joint. They do not with individual.
Okay, and another quick fire one. How much should we expect to pay for professional, financial, and legal counsel related to end-of-life planning?
Well, it's going to depend. It usually depends on the level of sophistication of the estate or the family. If you're making, if it's a you know, a multi-million-dollar estate with kids from 3 different marriages that are in the mix, that's going to be very different than what I would think would be a more nuclear family situation would be. Typically, I see, you know, anywhere between $1,000 to $3,000 worth of legal fees in the Washington area, so make adjustments based on where you live. That is typically sufficient to cover all of the main bases in terms of the legal planning. The financial planning is going to be different. Financial professionals are paid a number of different ways. As a lot of consumers know, sometimes financial professionals are only compensated when there is a product bought. Other financial professionals can be paid on a fee basis, where they basically compensate the professional like an attorney. I'll pay you a certain amount an hour, or I'll pay you a flat fee to be able to do a plan. I would very much, you know, recommend you on the financial side of things, you know, you see if you can find a fee financial professional. I'll make a note that the Financial Planning Association, FPA is the acronym. They really restrict most of their members to be fee-only planners. That might be one way to go in terms of identifying a qualified population of professionals that would be appropriately compensated for counsel in that period of time. But that would be, you know, when you're talking to a national audience, those numbers can range wildly, but generally speaking, I would say more than 1,000 and less than 3,000. It would be the legal fees that I would expect to put together just about everything that you need with qualified professional assistance.
All right, thank you. And we'll back it up to a little more global question for you here. How can we encourage families to think about long-term financial needs when they're consumed with trying to make the most of remaining time with a sick parent?
I think that's a great question. And I'll repeat the question just to affirm that I heard it. How come the focus is on long-term planning when people are overwhelmed with the short-term needs of a dying individual?
Yeah, how do we encourage those families? Yeah.
Yeah. Well, I mean, I think that the answer lies in the question. I think that families are overwhelmed with the needs of the dying individual, a lot of times to the expense of considering the financial implications of death that might impact more than one person over a much longer period of time. In most family situations, the temperament of the question is the reality for the family. You know, I have had lots of conversations with families facing terminal illness where the conversation is a lot like, how can I think about taxes when I'm trying to remember to eat lunch? But just to give some framing on things. Part of why these comments, I'm hoping, are impactful is, and part of the reason that I led the conversation with a discussion about grief and the all-absorptive nature of what families facing terminal illness are really going through, there's very little mental calories that can be exerted on doing analytical planning, you know, weeks, months, years in advance. At the same time, if each of us can be self-aware of our limited capacity to assess the financial implications beyond, you know, living in the moment, I think that we can improve the outcomes from a financial standpoint. That's part of the reason from a time frame that I divided the needs of the living and the needs after somebody passes away. Depending on the financial situation or who the wage earner is or whatnot, the financial implications of a premature death can be extremely impactful, and lives can change by taking appropriate action to the degree possible before somebody passes away. But I'd like to really compliment the question, because that question, I think, is what we built this entire presentation around. The reality for families facing a terminal illness is everything's on a day-to-day basis, and it is all-consuming, and I've lived that personally. The awareness that somebody else outside of those consumed by the situation might need to be brought in or might need to help make me aware of the things I'm not able to think of right now can be critical in terms of maintaining financial security for family members that are left behind.
Wonderful, and we'll leave with one last question here, and it kind of comes back to, you just referenced the appropriate action. You know, our legacy retreats are hinge upon being intentional with your time, with your family, creating memories, and one of the innovative approaches that we have are these legacy videos. You know, to really develop families and leave these treasures for families, and we found great value in that. So the question to you is, do you see value, or what value do you see in such products like you referenced the legacy will or our legacy videos? And do you see your clients creating these type and leaving these type of items in your work?
Well, I think that the answer to those personal legacy efforts, I think that they're invaluable. I think that a lot of the financial things that I'm talking about are sort of the mechanical, tactical, operational things that need to happen sort of behind the curtain to give families the best financial situation through and after a terminal diagnosis. But I think that the concept of the legacy plans, like the video coming off of the retreat or any of a number of, you know, books or journals that I see out there, that's really it's the conservation of the personal relationship that's hypothetically going to be lost on the other side of a terminal illness. I think that they're invaluable. I strongly recommend my clients do it. I think the answer to your question, though, Eric, is I think not enough people do it. There's a good, healthy handful of people that I think that make some effort to clear the air, for lack of a better way to put it, to have conversations with loved ones, to find appropriate meaning through their life in this transition at death. But I think that having a format to do it in, that the terminal individual doesn't have to create the structure to be able to communicate most important wishes to people that are left behind, I think is an enormous help. Families that I counsel do have, regrets is too strong of a word, but I can't come up with another one right now, of wishing that they had had some perspective that the deceased loved one might have been able to provide, but there wasn't a vehicle to be able to do that. So, for everyone, I would strongly encourage the exploration of that. Whether it's the legacy video from the retreat or any of a number of different resources that you can find from a Google search. I have never had a family reply back to me that these are a waste of time. They have always proactively said, after I've recommended them, that something along the lines of, thank God that I still have this particular attachment to the person that I lost.
Outstanding. Yeah, I guess that taking action on both sides, the tactical and the strategic, are important in all capacities for sure. Tom, we really appreciate your presentation. Your expertise has been wonderful, and it's going to be an incredible resource for our families, not only today but down the road in the future. So we really appreciate your time.
No, happy to be here. Thank you.